Welcome back. Futures are searching for direction this morning ahead of the weekly jobless numbers out this morning. Take a look. Dow futures are down 32 points right now. The Nasdaq is up. It's up just 7 points, but the S&P is also negative, down about 3 points. Market snapped a 3-day winning streak yesterday with declines, with the Dow down 170 points and the S&P down 11. Nasdaq was up yesterday as well, 14 points. There are concerns, however, growing over the spike of new coronavirus cases. Joining us right now is the CEO of Verdance, Leo Kelly. Leo, great to have you this morning. Thanks very much. How concerned are you with the fact that as we reopen America, we're seeing an increase in spikes? Is this going to take us back a few steps?
Well, obviously, you have to be concerned at any increase in coronavirus spikes, but I think we have to take a few other points into consideration. One is we're doing more testing, so we're going to see more cases. Secondly, there's an interesting statistic in some of these states where hospitalizations are going up, where as people come back to do elective procedures, they're being tested for coronavirus. So you're going to see more coronavirus cases in hospitals as a result of all this. So I think we have to focus on the death rate. I think we have to focus on the vulnerable. I don't think the country's going to have an appetite to do a complete shutdown again. And I think the market is showing us that that's what it believes as well.
All right, so you've got initial jobless claims out this morning, and in about 2 hours' time, economists are predicting another 1.3 million jobs lost in the last week. That would be 44.2 million jobs lost since the end of March. Leo, how does this play into how you invest today?
Well, I think when you look at this quarter, as damaging and as difficult as this quarter is in terms of the statistics around unemployment and small businesses, that's what the Fed came in to do, and that's what the stimulus came in to solve for, was to get us through this moment. The market is a forward forecasting mechanism. And so while the jobs number is going to be ugly today, the key is, what is the pace of change, the rate of change? And as long as the economic data continues to improve, then we have to look forward beyond what we're going through today in terms of our investment strategy. As I've said before here on the show, Maria, as you know, rate of change on the economy, rate of change on the science, and take note of the political atmosphere around shutdowns. Those are the three key variables. And as long as they continue to improve, the market should stay strong.
Mark Tepper.
Leo, when it comes to putting new cash to work, what are your favorite sectors or industries right now?
Well, new cash to work today is a little bit tougher proposition because the market has run, it's gotten what I can see a little bit ahead of itself. It's already, in my opinion, discounting a successful outcome for the year. We're almost at a high, so it's a little bit more difficult today. There are still some lagging areas like industrials and financials that are interesting. Small caps continue to rebound, but they've made a big run. Frankly, cash is a good place to be right now. We're going to have volatility. Volatility, as I say, is in the DNA of an equity investor. So holding cash isn't bad. We also, by the way, like private equity. There are opportunities in the private equity world, maybe not in the mainstream venture capital world, but there are opportunities in private equity that give you a chance to make a bit of a higher yield.
All right, we'll leave it there. Leo will be watching. We'll take a look at those PE ideas. Thanks so much, Leo Kelly, for joining us this morning. Coming up